I had, like Mr. Weidmann and Mr. Winch, reservations with the proposal, which had to do with the same reasons they raised. It was a step too far to come along, and we would have wished a different guidance, which doesn't bind us too long in the future, in order to stay agile and ready in case inflation requires an earlier lift-off.
Okay, fair enough. So we can put you in that camp. But I mean, if you look at what's been happening with core inflation over the better part of the last decades, core inflation in Europe has averaged around 1 percentage point. Is it your view that with this revised forward guidance, with the renewed forceful measures, especially forceful or persistent, I'm quoting there, when interest rates are very close to the lower bounds, that the ECB will be more likely to achieve its inflation target?
I think what one has to take into account is that at the moment, inflation in various countries in the Euro area only well above 2%, that in the Euro area we had 2% back to 1.9 and maybe 2% again. And we still have a number of expected changes in front of us. So albeit it's a tail risk, we cannot exclude that inflation goes well beyond and may stay there. The current inflation dynamics lets us expect that we will go above and go down again, but we cannot discount it. And what has happened in the forward guidance you alluded to is there were several elements which created my disagreement. I think number one was that we had established with all and full support of everybody a very good strategy in which we established 2% in a symmetric manner, and included also other elements there for discussion, which is the owner-occupied housing to be included in the price index in the future, but also dealing with climate change, return to that. And this, how to say, was not fully reflected in the presentation, which, how to say, was too strict. It was done on 3 elements there, and all 3 elements together would have meant that the rates would not go down before 25 is the earliest, and I think, or even later, that's a too strong commitment. And the second part was also that if one looks into the underlying inflation, which is part of the formulation, I think I would have liked a bit more specificity to what this applies, because underlying inflation, it can be any kind of core inflation in which one wants to exclude certain things. And what we have seen more recently is a major increase in property prices in many of the European countries. And this is another element which was not happening. And last but not least, I think as it was said by Mr. Winch, one should have thought perhaps about an escape clause or a formulation which allow us to break the link earlier. And here we have to say that in any case, our mandate breaks any forward guidance, but I think it would have been more honest to the markets to tell, yes, we want to stay accommodative as it is for the time being, but we stand ready to change the rate if it's necessary.
Sir, some analysts argue that the ECB missed an opportunity with its first policy statement following the strategy by only focusing on forward guidance and not making an effort to draw a link to the TLTRO or to provide a new message on PEP. What do you say to that? And can you give us any insight as to why you chose not to incorporate those elements in your first policy statement post the strategy update?
I think the reply to this is very simple. There's simply too much uncertainty in the middle of the summer in order to make a forward guidance now. At the time, we are waiting for the September projections to guide us, and also to understand what happens with the pandemic and what's the decision by the Fed will be. So I think it would have been not realistic to assume we could make a decision now. for September, we have foreseen a discussion of all the elements you mentioned besides the rates, which is TLTRO, which is the BEP, which is also ABP, the asset purchasing program, which was always there, in order to find out whether we keep it as it is or we change it. Both are possible depending on the inflation developments, depending on the output gap developments, and depending also on the other elements which are taken into account in our decision.
Do you see there being a possibility of the PEP program being extended beyond March 2022? And if so, under what circumstance would that happen?
As you know, the PEP stands for Pandemic Emergency Purchase Program and not for permanent. And emergency, it's not eternal. So this is something what's created very successfully in order to deal with the pandemic. And as a result, if and as the pandemic is over early next year, and we can go back to the normal purchasing program, PEP will end. If, however, for whatever reason, which has to do with health, but likely there's a need to further be accommodative on the maritime side, I think everybody, also those which you call Falcons, will agree to an extension if the circumstances are there. But for the time being, we don't know this, and for this reason, no decision was possible.